Most breakout traders lose money for one simple reason. They are trading the chart and not the auction. Every time price breaks out of a range, they are blindly buying or selling only to get trapped and stopped out minutes later. The level of breakout wasn't wrong, but the participants behind the breakout were wrong. So in this video, I'm going to show you the exact order flow confirmation I use before taking any breakout trades, and you will see the difference between a breakout that's likely to continue and one that's about to reverse and trap everyone chasing price. It's pretty simple, and it always goes back to this diagram. The market has two phases, balanced and imbalanced. When the market is balanced, that means the most volume is being transacted at this certain level. The reason being is because buyers and sellers are both satisfied with this price level. When you get imbalance, that means one side of the market, whether it is buyers or sellers, they started to get more powerful and take over, right? So when you're trading breakout strategies, you are going to capitalize mostly on the imbalanced move. And then once we've hit some sort of a resistance level in this bullish scenario, then you can anticipate for price to start to balance again. But most of your profit taking will happen within this imbalanced move, because this is where you are going to get that price expansion when you break out of this balance range. Now, this is what it looks like on a normal candlestick chart. Here, you can see that price is pretty consolidated, right? Anytime it went to the extremes of the highs, it quickly got sold lower to the extreme lows of this consolidation, and then it gets brought back. So you can see it's a pretty zigzag pattern. Buyers are buying at the extreme low, sellers are selling at the extreme high. And this is a good indication that both buyers and sellers are satisfied with where price is playing at the moment. And then eventually you would get some sort of aggression from one side of the market. And like I said, in this scenario, this is a bullish scenario. So buyers eventually come into control and take us out of this range high. So that is your breakout strategy. And here, for a clearer picture, you can see that the range high and the range low. Range low is being brought up, range high is being sold off. But that isn't enough to solidify if the move is valid when you break out of a range, right? And that is where your footprint and order flow comes into play. So this is your basic footprint chart, specifically the delta profile. So delta is the difference between aggressive buyers hitting the ask and aggressive sellers hitting the bid. If it is green, that means aggressive buyers are in control at this certain level. If it is red, aggressive sellers are in control at a certain level. So this footprint chart is the same thing as this candlestick chart, but you can see how much more information it provides for you. Candlestick chart only shows you candles. When it breaks out, you are most likely going to be longing this with not much of a confirmation. You're just seeing the candle breakout. But with a footprint chart, you're seeing the actual participants behind the breakout of this move, right? If you look here, starting from the start of this consolidation, you can see you have a lot of selling here, right? Very negative delta. The candle closes fairly bearish, but these negative delta at the extreme lows of this candle is not getting rewarded with lower price action. And instead, they get absorbed by any passive buyers here, and price quickly gets brought up. And you can see with the next candle, you have a strong initiation that gets rewarded with continued higher price action. Now, when you go to the range high, it's the same thing, but inverse. You have a lot of buying at this level, but there's essentially a wall of passive sellers. A wall of passive sellers are absorbing every single aggressive order that gets executed into the market, and hence why these strong buying, right? So you can see how strong this aggressive delta is on the buying side. All of this strong buying, they're not getting rewarded with strong bullish candle closures and strong movement higher, and instead they get absorbed and price initiates lower. So that is a good sign that price is currently in fair value. At extreme highs, they're being absorbed, initiation lower. At extreme lows, they are being absorbed, initiation higher. And again, the more times it taps into a resistance level, the stronger the resistance level becomes. Same thing with support, right? Look here, we come back, strong buying again, right? But this candle closes with a large upper wick, absorption. Next candle, initiation. Buyers are still trying to take control. You can see at the highs of these three candles, buyers are still in control at the highs of them. but they're not getting rewarded with higher price action. And the market closes lower with initiation lower. Strong aggressive delta, strong negative aggressive delta on the downside, and strong aggressive positive delta on the upside, but no reward. So that is a clear sign of absorption at the range high to initiate lower. So it's pretty clear now that we are in a range. We're in a very tight range. Same thing here on the lower end of this range. Sellers, they're taking control, they're in control, right, compared to buyers, but the candle is not showing you its reward. The market has no reason to move lower because the limit orders are sufficient enough to fulfill any market executions that happen at the range high or range low of this range. Now, with every breakout, eventually one side will become more powerful and they are no longer satisfied with this fair value. And that is exactly what happens here. So eventually, buyers start to take control. You can see here, buying initiation, that gets rewarded with a higher bullish candle that breaks above our resistance level. So that is your first indication. Second indication of a successful breakout is when you have all of these selling, but price is unable to initiate lower. So the next candle is a pretty indecisive candle because you have strong buying above here, strong selling below here, but this candle doesn't necessarily reward one side. And in fact, is actually rewarding more sellers than buyers at this specific candle. But because we've broken through this resistance level already, and the previous level has strong buying initiation, you would still be favoring for longs as long as this level holds, right? As long as this candle holds, because this is where you would anticipate for a strong participant of aggressive buyers to step back in. And that is exactly what you get here. Here, where you previously had strong levels of buying, the market, even though it closed bearish, it failed to close past this level of aggressive buying. And you can see that buyers are starting to protect this level. This pretty much forms a base for buyers. And it becomes more clear when you look at the next candle. You see how the candle opens? Again, still at this level of aggressive buying, it opens, and here you have a strong selling aggression that takes control at these four levels, but price fails to close lower because this is a level of strong buying participation. And instead, these sellers get absorbed and we continue higher. Again, you have more levels where sellers were in control, but they were all absorbed by passive and aggressive buyers. And this candle closes bullish. So that is a successful breakout. And that is how you could use order flow to determine a successful breakout. If you look at this example, you can see a failed breakout. This is the range high. This is the range low. Here, buyers are absorbing any sell orders to initiate higher. And at the high, sellers are absorbing any buy orders to initiate lower. So we are pretty much in fair value at this specific range. However, eventually, buyers overpower sellers. But you can see here that the candle closes back lower. If you was only trading the candlestick chart, this one, you probably could have had a win here. This one, it would have been a loss because you was going to enter at the breakout of this range high straight away, right? And that is what I mean when I say, when people blindly buy or short a range breakout, most of the times you're not seeing the actual participants behind the move. Because without these two red candles, this just looks like a successful breakout, right? Strong bullish candle above this range high. But you can see here that it fails and it returns back to value area. Because you have to remember, when price has a fair value, price is most satisfied at this level because the market's aim is to fulfill as much transactions as possible between buyers and sellers. And where they can do that mostly is through fair value or balanced prices, so within this range. So the markets will always favor these type of levels to return back into. So you can look here, you can see here that buyers took control, but sellers quickly sold off again and brought us back down into value area because this is where the market is comfortable. If you look here on the footprint chart, this is an easy avoidable loss because, like I said, using footprint chart and the delta profile, you can see that selling absorbed any buyers and buyers absorbed any selling, so clear range. When we break out of this range, you can see that at the high of these two candles, buyers are starting to get absorbed. They are no longer getting rewarded with higher price action. You would think that because we are in control, strong control by the way, compare the significance of these delta profiles to other delta levels, there's a strong buying significance that is in control at these highs over here. They are not getting rewarded with higher candles or a higher price action. And instead, they get absorbed, selling initiation kicks back in, and we continue lower back into value area. So using footprint, it allows you to filter out a lot of low probability breakouts and helps you with identifying high probability breakouts, because all of these aggressive buyers, they are being rewarded. If you look at this one, these aggressive buyers over here, they are not being rewarded with a higher body closure, right? And instead it closes with a wick, and the next candle, buying absorption, selling initiation kicks back in into the value area. So if we look at live examples now, this is what we have. It's clear that we are in a consolidation. The reason why we are in a consolidation is simple. A lot of selling here that are in control, they successfully take control at these levels compared to buyers, but this candle doesn't close bearish, and instead it closes bullish with a long lower wick. So it's very clear to you that these sellers over here are all absorbed by passive buyers, and buying initiation starts to kick in. You can see from a secondary candle, sellers were still being absorbed. We continue higher. We have buying in control here. Aggressive buyers are in control at these levels, but the candle is not rewarding them with a higher body candle closure, and instead it closes with a long upper wick. So clear buying absorption there. Initiation kicks back in with sellers, right? Sellers are dominant at every single level here apart from one, but you can see how selling initiation kicks in after the buying absorption, and we just come back down to this value area. Again, this becomes a support level now for the range, and this becomes a resistance level for the range. So every time price comes back into the support level, you could expect for the same thing to happen. Selling absorption, buying initiation kicks in, they get rewarded, and here, strong buying initiation on the secondary candle. Similar to this one over here. Strong selling initiation with the secondary candle. And from here, we pretty much just play within the range. Every time we come up to a range high, buying initiation, buying absorption, selling initiation kicks in. And here, you can see that it is just pretty consolidating. Now, if I play price out, again, we come back down to this range low. You can see sellers are getting absorbed again. And now we would be anticipating for buying initiation to kick back in to take us within this range, because never assume that it will break out. As long as price is still within this range, the highest probability trades you can take is at the range low or short at the range high. Because even though it comes close to these levels, you should never assume that it is going to break out until it does break out and gives you signs of breaking out. Next candle. This candle is different to all of these candles. The reason why is because even though we haven't broken out of this range fully, you have strong selling, buying absorption, strong selling. They're all getting rewarded, right? All of this strong selling is getting rewarded, especially at this level over here. The reason why this is a different candle is because when we come back to this range low, you anticipate for this candle to look similar to these type of candles, right? Where you get selling absorption, because you would anticipate for passive buyers to step back in, as this is a strong support level. Consolidation, support levels are where you would anticipate for passive buyers, and resistance level is where you would anticipate for passive sellers to kick in. When looking at this candle compared to all of these absorbed candles, you can see that there's a big difference here. These sellers are actually getting rewarded, and this is your first sign that we could potentially break out of this range low. Now, what I would be looking for after here is I want to see buyers try to step back in and take us back into fair value, but they fell and they pretty much get absorbed by sellers. Selling initiation kicks back in and we continue lower. That would be the strongest confluence for me. So if you keep playing price out, that is exactly what you get here. Buyers, strong presence of buyers who took control of these levels and they tried to take us back in, but you can see the dominance in selling over here, right? Sellers completely dominated most of the level in this candle after breaking up this range, and any buyers that try to bring us back into this value area were quickly absorbed. So now this is where you could start to fill up with your entries. So the first entry, this is where your first entry could be. On the closure of this candle, if you wanted to wait for a higher probability entry, then you could wait for us to close through this aggressive buying that got somewhat rewarded, right? But if you're more aggressive, then this could be an entry that you could take. Stop loss would be above here. The reason why is because this was a level where buying was absorbed and a strong selling aggression dominated this level. You could say for a fact that this is a strong level where the sellers would likely step back in if we retrace back to this level. So your stops could come above that level. Entry on the open of the second candle. And let's say you could target a fixed 2 to 3R. So playing price out, we retrace. This level of aggressive sellers steps back in, protected that level, and we bounce lower. So now, this move lower, you can start to trail your stops to this high over here. Because this level has confirmed to you that this is a strong protection level for sellers, right? Buyers tried to break us higher, but they couldn't. They ended up getting absorbed again. Selling initiation kicks back in. So here is a strong level in line with these aggressive sellers for protected sellers. So continue to playing price out. Again, price retraces. All of these aggressive buyers dominated these higher levels. Because, like I said, once we break out our range, the opposing side will always try to take us back inside the range. Because that is where they are most comfortable. The market is most comfortable within this range. So the opposing side, if we break out, they will always try to bring us back into here to facilitate more transactions. But instead, they do not get rewarded. So it's very clear here that sellers are in control. Specifically, passive sellers at this level, because all of this absorption and then initiation kicks back lower. Initiation is what moves the price. Absorption is just your first sign that price could have a reversal, because the absorption is basically the wall. The confirmation is the initiation. So here, that's exactly what you get here. So now you can start to go break even, right? And then if you fast forward price out, you could go break even, and then you could trail your stops to this high, because you would anticipate for this level to stay protected, as that was where a strong presence of sellers were confirmed. And then it just continues lower. Again, like I said, at the highs of all of these candles, aggressive buyers were in control, but price does not move higher, because there is a lot of sell limits that are absorbing all of these buy orders. And the initiation expands price lower. So now you can start to trail more aggressively to potentially this high over here, or even this high if you're super aggressive, right? If you're not that aggressive, you could keep your stops around this level, because that is a strong protected level. And there you have it. Next candle, strong aggressive buyers absorbed, initiation kicks lower, initiation kicks lower. So now buyers are pretty exhausted here, and sellers were in control with this whole move. Here you have another example. This time it's slightly different, but you still have your range high here. Buying absorption, selling initiation, clear range high. And here you have a clear range low. Selling absorption, initiation with buyers, selling absorption, and buying initiation with buyers. This example is slightly different because we actually broke out of this range low. But look what happens here. Even though we've broken out of this range low, aggressive sellers were still not getting rewarded, especially in the next candle. All of these aggressive selling were pretty much absorbed, and you have a strong wall of aggressive buyers here who pretty much took back control and initiated price higher. So you can see how Footprint saves you with scenarios like this. When we break out of a range low, it doesn't necessarily mean that is the final break and we're going to continue lower or higher if this is a bullish example. You always have to look at what participants are behind the breakout move. If we get a breakout here, on a normal candlestick chart, you wouldn't be able to see all of these aggressive sellings that didn't get rewarded, right? But because you have the footprint chart, you can see that this is a strong sign for potential wall here. So now, I wouldn't necessarily use this range low anymore for my breakout if I was to continue lower, and this becomes the next wall, despite it having only one candle, I would want to see us break out of this level before I would take any shorts. I would no longer be interested in shorts now because this is a strong level of protected buyers. There's strong passive buyers there and strong aggressive buyers. So this is a really strong level that you would want to see price protect if it wants to continue higher. And if you want to short it, you want to see this level go. So now this pretty much becomes your new range. Playing price out, you can see that we just come back into this value area. So like I said previously, anytime we break out of a range, the opposing side will always try to come back in and bring us back into this value area because that is where price is fair. And this is exactly what you get here. Sellers tried to break out. Sellers became more powerful, tried to break out, but aggressive buyers and passive buyers pretty much stepped back in and brought us back into this value area. So that means the markets weren't ready to move out of this range yet, to break out this range yet. Now, if you keep playing price out, you are starting to get signs of a breakout higher. Strong initiation, selling absorption, aggressive buyers, they are not getting rewarded yet with this specific candle. But if you look at the next candle, so if you break this down, you have buying absorption. When the candle opens, the next candle opens, selling initiation starts to kick in. But the difference here is, so you see how this one, you get buying absorption, next candle opens, selling initiation kicks in, and the candle closes bearish. The difference with this one is that all of this selling initiation fails. They actually get absorbed by a level of aggressive and passive buyers here, and initiation for buyers steps back in. So now this level becomes a significant level. Because of the fact that it happened at the range high of this consolidation, it is a strong sign that we could get a breakout to the upside. So now if you keep playing price out, again, sellers try to step back in. They actually took control at these levels in terms of aggressive selling, but price did not reward it with a lower candle closure. And instead, we continue to close higher. So if you are on the riskier side, this could be an entry that you would take, right? Entry at the next candle open and stop loss below this level, because it's been proven 2 times now that this level over here has a presence of strong buyers. If we retrace back to this level, you can anticipate for price to protect this level and continue higher, right? In the sense of buyers. The reason why it's risky is because you're still playing at the range high. So we haven't fully broken out of this level yet, but there are clear early signs that we could potentially break out of this level. So again, you can target a fixed 2 to 3R. Playing price out, get tagged in on the next candle open, and you can see that all of these candles just reinforce the idea of bullish price action. This general level over here gets protected. Anytime price comes back down, they were quickly absorbed. Sellers were quickly absorbed by passive buyers, and aggressive initiation kicks back in. And we continue higher. That is a risky entry that you could have taken. If not, then you could just waited for us to break out of that price fully. Look for confirmation. So here, selling absorption, buying initiation, and entry on one of these candles that expand higher. And again, target 2 to 3R. So that is pretty much all there is to using order flow to confirm breakouts. If you're not using order flow to confirm breakouts, you are just going to be buying or shorting pretty blindly. You're not seeing the actual participants behind every candle. So if you guys found this video helpful, make sure to like and subscribe, and I will see you guys in the next one.